And I'm very happy to be here. This second session is on green sustainable finance transformation. I think it's an excellent follow-up to the very good initial remarks presented earlier on. We will have a panel composed by, I believe, not only very good friends, all of them, but excellent panelists, impressive in their background. And also what we have tried to do is get different angles, different perspectives from colleagues in addressing the main topic today, green sustainable finance transformation, and more specifically, how global financial mechanisms can be reshaped to lead the great transformation. Today, we have Mr. Fernando Pons, Vice President of EBRD, Mr. Francisco Benedito, CEO of Climate Trade and Climate Coin, Mr. Fredric, CEO of NOAA Regen Blue Economy, Ms. Margaret Kim, you've already heard Maggie before. Excellent intervention, Maggie, congratulations, good to see you around. CEO of Gold Standard, and Mr. Leo Park, Manager of Financial Institutions at the Green Climate Fund. As initial remarks, we will give the floor to Mr. Fernando Pons. Fernando Pons became EBRD's Vice President on Human Resources, Corporate Services, and he is also the Chief Administrative Officer since October 2017. In his position, Fernando Pons has overall responsibility for the formulation, coordination, and implementation of the bank's strategy for corporate services, with the aim of providing value through the design, transformation, and continuous improvement of administrative support services. In addition to that, Fernando will be involved in ensuring an effective and efficient delivery of business support processes that ensure the required levels of control and compliance, maintaining strong internal customer relationship, including customer satisfaction and monitoring and managing services delivery levels. The Vice President, Fernando, is a member of the Executive Committee and Management Committee and chairs the IT Governance Committee. Fernando, the floor is yours for a keynote speech, and then we will afterwards, we're very happy if you can join the panel. The floor is yours, Fernando.
Thank you, Javier, and good morning, good afternoon, good evening to all distinguished speakers and colleagues. First of all, thank you to you and to the GSDV 2021 forum organizers for the invitation to participate in today's panel discussion and to give this introductory speech. I'm very honored to be here today and to be able to share with you the journey of EBRD in the digital transformation. At the European Bank for Reconstruction and Development, we have recently approved a new strategic capital framework that has three new priorities for the years 21 to 25. I'm sure you will recognize them. First and foremost, we want to be a more green bank with a focus on climate change and green transformation. Second, we want to be also a bank that focuses on equality, especially in private sector and SMEs. And finally, the third, and the one that is about today's topic, is becoming a more digital institution that can enable our mandate through digital transformation. Today, during this Green Sustainable Finance panel discussion, I will explain what is the role of international financial institutions in general, of EBRD in particular, the contribution to this transformation and this digital journey. I'll start by talking and focusing on our internal journey, inward looking towards how we are transforming EBRD to be more digital and what are the requisites and enablers of this digital transformation, which is more internal. Second, I'll try to explain how we are focusing on our clients and our customers and countries of operations to enable them to be also more digital through our investments and policy dialogue. And finally, I'll do a reflection on digital platforms and what is the role of IFIs in the fostering and the support to these digital platforms. Let me share my slides with you so that I can explain more clearly what we are talking about. Thank you. I hope you can see my slides now. Thank you for that. So first, let me start with the digital internal journey. I'm sure that all of you have experienced also a positive acceleration of the digital journey through the COVID-19 events. We personally at EBRD have discovered that the situation of the lockdown and the COVID remote work has had a very positive impact, both in terms of our interactions with clients, but also in terms of the internal processes, which many of them were not done remotely before, and now they are done remotely, although with a lot of effort, but very successfully. In order to explain this internal journey and digital transformation, I would like to first and foremost explain and stress the importance of the digital technology enablement. I have brought today a model that shows how you can implement digital transformation, focusing on three parts. The internal digital technology enablement, which we are now undergoing, and includes a very decisive and focused journey to the cloud, the installation of collaboration tools, a new data center, and most importantly, the focus on data quality, data cleansing, and data integrity, so that we can orchestrate this very important enablement, which is the foundation and the base for the other two steps. The second step is that we are undertaking a large investment to address digital business optimization. Now this is focusing on our business processes. This is focusing on our interactions with clients, with the user experience, and also we want to make sure that we can enhance our existing revenues by doing data and analytics and ensuring that we can improve our performance using advanced data science and dashboarding and data analytics for decision making. This second step is a key phase in which we are now embarked, and for the next 3 years we are investing quite a lot in terms of this digital business optimization. The third step, and probably a very key one, is to work with the business in order to define what digital transformation means at EBRD. And this is definitely not technology roadmap. It has to come from the business. This is why when we talk about our multi-year investment plan, we are always repeating the mantra that is a business-driven and technology-enabled business plan to support the mandate and the vision of EBRD. I am sure that you have seen many different digital transformation models. This is just one example of a digital transformation model that is working well for us, but there may be others. Let me now focus on the outward-looking part of our journey. This is about our clients, about our countries of operations. And in this digital transformation, and once that we have led by example and digitalize our model internally, we want to make sure that we leverage synergies with our climate and inclusion priorities. Digital has to be seen as a cross-functional initiative that enables the journey of the bank and the mandate. It's not an end in itself. This is why beyond the tools and the technology that we bring to the table, we are also focusing on advisory on digital policies and legal frameworks for our countries of operations. This is a very important area of activity, given that not all countries of operations have the right legal environment, the legal conditions, and the legal frameworks to allow a digital transformation to happen. The EBRD is in a privileged position to share best practices among countries of operations and to work with policymakers in order to have a positive impact in blockchain, in digital certifications, cybersecurity, and different areas. This is exactly what we are focusing now to define those next steps. Also, we want to make sure that we can enhance digital skills within our economies. There are a number of different programs for education, for collaboration with educational institutions and small and medium enterprises, and also for women and gender-related groups of activities where digital skills are fostered and developed. Not only that, we also make sure that we look at investing in digital startups. This is another very important area where investing capital can have a positive impact. And let's not forget that some of our clients are not transforming to digital. They have started as digital enterprises, therefore they are quite ahead in the journey. The question that it remains open is how do we create digital touchpoints to enable these key business models and how we can make sure that we foster and collaborate with the digital transformation. The third point I would like to share with you is a reflection of digital platforms. I'm sure that many of you have recognized the names of these companies if we look at market capitalization through the years. And perhaps you have worked like me in any of these companies. I was in Exxon for many years before joining EBRD. And you can see that only in 2001 and 2006 there was an IT company. All others were asset-heavy, capital-intensive major corporations or finance. But the transformation starts after 2011, and now in 2016 and today, you can see that many, if not all of the large market capitalization companies are either technology companies or heavily platform-driven companies. What is the reflection behind these figures? Is that going forward, the role of platforms, of digital platforms, is going to be key in the future of economies and also, and therefore, in the future of financial institutions if we want to have a positive impact in the markets. The reflection is the following, is how is value generated by platforms? The platforms, collaboration forums, where different actors interact according to some standards and freely exchange goods and services, are a real change driver of digital transformation. We all know about the platforms that you can see in the screen. The role of IFIs in creating, fostering, and enabled platforms is still an unknown arena. How can we, in IFIs, foster the development and the creation of digital platforms, even oversee the governance of these digital platforms? And why this is important? Transaction costs, it enables small companies to compete with large ones, reducing customer acquisition costs and ensuring that there is a widespread availability of information. It will increase the communication efficiency of prices, of services, quality standards, and finally, it will increase trust. I brought with me one example of the automotive industry where you can see the shift from the traditional to the emerging and value creation and this platform with their high potential. It's an open question, but probably one that is worth asking ourselves. Finally, as conclusions, I'd like to stress 3 key points that I hope are relevant and you can use as takeaways. First and foremost, true digital transform enablement has to be both internal and external to be credible, effective, and continuous. If we don't lead by example, transforming ourselves and our tools are not up to date, we will not convince others to follow this journey of digital transformation. The second one is that digital transformation is a cross-functional enabler, not a goal in itself, and therefore it has to be well integrated and aligned with the mandate and mission of each one of our institutions. And finally, as I said a moment ago, I truly believe that digital platforms are a game changer in transformation and a very powerful tool. The question remains, what is the right level of ambition of our institutions in this arena? Thank you very much, and I hand it over now to you for the panel discussion. Thank you, Javier.
Excellent. Thank you so much, Fernando, Pons, Vice President at the EBRD. I felt that was important to set the tone from the beginning for our discussion on digital transformation. I'm very happy to hear from Fernando that the EBRD is investing in digital startups. That's fantastic. Also important to hear on the digital platforms, digital transformation, blockchain technology. We have a few of our panelists today that will deep dive into digital area as well. At the end of the day, what we wanted is to combine, again, from different angles, different perspectives, your experience, and then initially through a brief presentation, then afterwards we'll have a number of questions. For us, it's so important to talk about the digital transformation and innovation at the outset, that even when we speak with asset managers, when I speak with CFOs, my point is that you guys, they have been doing strategic asset allocation for decades in a manner that perhaps is not adequate for today's time. So there are different frameworks. One of them, it's based on technology, impact, and policy. It's a framework that is called TIP. And in that connection, today we are going to address those three different pillars from different colleagues who are definitely very well experienced. Our next intervention, and if you have also a presentation ready, it's from Margaret Kim, CEO at Gold Standard. The idea, again, colleagues, is to have a presentation from each one of you so that we get to learn about the activities of your institutions or corporations. And then afterwards, this will be followed by a number of questions. There will be a Q&A session. So Maggie, good to have you with us. The floor is yours.
Thank you, Javier. Can you hear me?
Yes, loud and clear. Thank you.
Wonderful. Thank you, Javier, and good afternoon, ladies and gentlemen, and good morning and evening to those connecting from outside of Korea and Asia. It's a great pleasure to be part of this panel discussion today. So I like to start my presentation with a brief introduction of Gold Standard Foundation for those of you who may not be familiar with us. Think of us like a GPS in the car. You know where you need to go. So in the context of climate and development, governments need to achieve nationally determined contribution as part of the Paris Agreement. Corporate companies need to achieve net zero target by 2050. And individuals want to take action. But how do you get there? And if you just look at a map, there are tens, 20s, and hundreds of ways of going there. And Gold Standard's role is to provide the roadmap to meet those objectives in the most efficient way possible, making best use of the resources and achieving the most positive impact possible. So Gold Standard exists to ensure there's maximized climate and sustainable development impact in both carbon finance and climate and development finance. We were established by WWF and NGO partners in 2003, And to date, we have over 2,000 climate protection projects for carbon offsetting underway, leading to more than 159 million tons of CO2 reduced. And all of our certified projects create over 23 billion US dollars worth value created beyond climate benefits. So in more than 80 different countries, our projects improve livelihoods, create new jobs, improved health of children and families, empowered women, and improved and preserved biodiversity. So gold standard for the global goals is a standard that sets requirement to design projects for maximum positive impact in climate and development, and to make sure these projects and programs and funds measure and report outcomes in the most credible and efficient way. And in my earlier speech, I talked about the challenge we face. Can we standardize how we deploy finance for this multi-dimensional interconnected interventions at scale? And I would like to share a bit more on those three elements that I addressed in the earlier speech. One is having the robust monitoring, reporting, and verification to assess progress and make sure that using those results and lessons learned feedback into refining and scaling. And second is rapid prototyping with first movers, leveraging the right technology. And Mr. Pons did talk about how digital platforms, especially for internal and external, can become an enabler. And finally, the importance of joining forces, taking the consortium approach, the partnership-based approach, to make sure we complement each other rather than creating sort of parallel silos. So why do we need such standards, especially the standards that stand for highest environmental integrity and maximize sustainable development impact? First, using the standards allow for credible and measurable claim, whether it's a carbon credit or impact claim or a corporate reporting for annual reports. Through third-party audit and ongoing robust monitoring and reporting, it ensures credibility and measurability of impact of the projects and investments we're making in, or the corporates are making in. Secondly, it allows projects to maximize impact. So gold standard certified projects, programs, and funds not only have to go through robust quantification of impact, but also needs to contribute to multiple SDGs as a requirement. And third, very relevant to the investors, it de-risks investment using strong safeguards and inclusive stakeholder engagement. And finally, looking forward, it can also catalyze further investment using innovative finance and management of claims. Then in all of this, and relevant to today's discussion, it's very important that the technology, the innovative technology helps us get better data more efficiently across the value chain from project origination to value creation. And this diagram in front of you illustrates value chain of carbon project for markets, but the same sort of the value chain and the concept applies to climate and sustainable development finance. And Gold Standard works with the Climate Ledger Initiative, where along with partners, we're piloting new technologies such as IoT, distributed ledger technology, and artificial intelligence to ensure that we can improve data quality and increase transparency and accessibility from monitoring and reporting and verification process, which Mr. Pons talked about in his keynote speech. It improves efficiency, drives the cost down, and overcomes the barrier to scale. And finally, I can't stress the importance of partnerships and consortium-based approach in driving this transformational change. We're very fortunate to be part of the innovative new blended finance vehicle, the Subnational Climate Finance Initiative. It's a $750 million fund or facility, of which the Green Climate Fund has granted first loss capital for private equity investment for small to medium-sized sustainable infrastructure projects. these are often the category of projects that have hard time accessing funds. So public finance provides the de-risking to attract private capital where it wouldn't otherwise go. And a supporting technical assistance facility led by the International Union of Conservation of Nature and Regions 20 develop bankable projects and also build capacity in those subnational contexts. And Gold Standard's role here is to ensure that projects and the fund follow safeguards and quantifies climate and development impact for credible reporting. And this is a really exciting opportunity and a really flagship example of how different partnerships, a private equity in the US, a commercial bank in France, NGOs and an international organization with conservation and SDG focus based in Europe and in Switzerland join forces to drive this transformational change at subnational level. So to conclude, we're facing the biggest challenge the human race has ever faced, and this will require unprecedented collaboration between governments, regulators, development banks, private investors, NGOs, and civil society groups, supported by the innovative technology that's coming to our hands, and to align all financing with climate and sustainable development goals. So very much looking forward to the panel discussion. Thank you very much.
Well, thank you so much, Maggie. Excellent. Thank you so much for the presentation. I will leave the questions for later on, but if you allow me, so that to clarify for the audience, because you have chosen a wonderful case study, you have chosen a wonderful example, and that is the Subnational Climate Change Fund, whereas a number of partners are participating into this, including the GCF. What is more specifically the role of Gold Standard and to the ambitious facility that, again, it's being participated by the GCF as the first loss equity, junior equity investor. Over to you, Maggie.
Yes, so Gold Standard's role is specifically to look at MRV of the projects that go through this. So our role initially with partners is to ensure that we develop a strong project design process that to make sure that impact quantification is very much baked in from the very beginning, from the project design phase. So all the projects that go through this facility are guaranteed to produce impact and make sure that they follow the most robust and highest environmental integrity requirements. And follow the safeguards that are best in class. So that's our role, to make sure that we set that process and review and verify the projects going forward.
Very clear. Thank you. Thank you so much. I thought it was so important in having that particular case study that it was good for everyone to understand your role. And with that, we will move to our next presenter. Is Mr. Francisco Benedito, and he is the CEO of Climate Trade and Climate Coin. Frank, the floor is yours.
Thank you so much, Javier. Thank you for inviting us. And let me see if I can share the presentation so I can start. I guess you should be seeing it now. So
it is with us, right? Thank you.
Fantastic. Thank you so much. And thanks, Margaret, because Gold Standard is so important today for the climate markets. So climate trade was, I'm gonna explain you a little bit of how we led innovation in the climate space since 2017. And we've been focused on the carbon markets, but not exclusively on the carbon markets. And how climate trade today is one of the leading marketplaces in worldwide and especially in Europe, using new technologies. So basically, climate trade was created in order to to help companies to achieve carbon neutrality. Until now, and as the panelists know, it was very difficult in terms of the traditional carbon markets to be efficient, to have certain logic, and then because obviously like the traditional carbon cowboys and the brokers were dealing on these markets. So basically we needed some that Article 6, and we needed that technology that we were leading also with the United Nations Climate Change Coalition from the very beginning, in terms of introducing new tools, as Margaret was saying, that digital MRBs, that satellites, that connections, blockchain, that's what we use. No? So basically, we created the marketplace. The first beta version was early 2018, right after we launched Climate Coin. It was the first crypto asset tied to a carbon credit in 2017. It was too early then, and we will be relaunching this year again. For now that the momentum is important, no? And well, Climate Trade has been working since 2018 to provide companies a way to offset the carbon footprint from in the voluntary markets. Today, we don't only have the voluntary markets worldwide, but also the mandatory in the UETS, and enlarging our marketplace with new markets all around the world. We opened offices in United States in January, and now we are moving all along there also to integrate the US markets to the marketplace. So as you can see, like Climate Trade has a very different US experience like the traditional trading venues. So it integrates all the SDGs in the projects that we feature. And well, we use blockchain technology for different reasons. The first reason is to avoid traditional intermediaries in order to reduce costs, and especially to avoid some sort of inconveniences in the cancellation of that double counting that we all heard about, and to provide transparency and traceability to transactions. It is relevant. It is radical. Transparency is coming in the market. Today, there are big momentums on, or the big things are climate, blockchain, and obviously the past COVID. But today also a very relevant topic is the transparency. We need radical transparency, and it's gonna be radical transparency in every aspect of the business today, and also in the climate business. It is very important to have it, because we need to know where the funds are going. We need to see if it's generating impact or is not generating an impact, because that's what killed the carbon markets traditionally. So we bring that with blockchain technology. We work with the less consuming blockchain technology in the world, which we switched already 3 times of blockchain in order to look for the best technology for our marketplace. We reduce costs, and as I feature here, Acciona is because it's one of the leading sustainability companies in the world by the Standard & Poor's. They came to us because intra-group, they were taking 2 months to transact credits. With us, it's 5 minutes. So today we work with projects all around the world, like Vera Standard, Gold Standard, as Maggie was here, and also UN, but not also that, also countries. The countries are sovereign to generate their own standards, the national mechanisms, and obviously we also incorporate that product in our marketplace for the companies to be able to compensate the carbon footprint. And today with that, together with that, one thing that Maggie was mentioning before about the digital MRB and how important is the new technologies in the platforms, as Fernando was mentioning at the beginning. We created the first API for carbon in 2018. The API of Climate Trade allows to connect the marketplace back and forth, back to the registries. So we are already connected to the first blockchain registry in Colombia. We have built together with the Stock Exchange of Spain, the first blockchain registry for Europe. And we are now piloting with some very relevant corporations and the government of Spain to create the first national registry, the first national market in Spain for carbon credits. And together with that, we are willing to expand it in Europe in terms of creating the different markets for national registries, all connected to a marketplace, and being able to cancel certificates automatically, not willing to wait 2 days, 2 weeks, or 1 week or 2 weeks to have to do it all manual. we need to connect marketplaces to registries. And that's a call that I make here in terms of the SDG 17. I was top 100 influencer for the SDGs in 2018, 2019. And I think that the 17 is clear. We need to collaborate. All the parts need to collaborate, and we need to put together solutions that work. And not only registries, standards, and also marketplaces like we do. So the API of climate trade allows to provide carbon neutrality to any company for their products and services. So today we offer we sell electronics with Telefonica, one of the biggest telecommunications companies in the world, and we offer that electronics carbon neutral. Also, we sell hotel rooms with Meliá Hotels International, which is the leading sustainability hotel chain in the world. And we offer hotel rooms carbon neutral with them, and you can use Meliá Rewards Mile Points to compensate. But we do this also with flights, and we do also this with cargo shipping, but we can connect, and also with building compensation. No? So we can do it in retail stores also. And today we work with some of the biggest corporations in Europe, like Santander Bank or Cabify, which is the Uber of Latin America and Spain, Danone, or the Post Office of Spain or Iberia, part of IAG Group. No? And advisors as Juan Verde, which is the former advisor of Obama and Biden, and part of many organizations like the International Chamber of Commerce, board members, or the Climate Change Coalition, as I mentioned. No? And our team is very multidisciplinary and complementary. As I don't have too much time, I'll explain in another situation, but we have more than 20 years experience on climate and very powerful IT and commercial team. And recently, and one thing we are very proud of, we won recently 1 month ago, the prize of the UN WTO as the best solution for the travel industry worldwide. So now we are already signed Friday, the first agreement to be the official solution of the UN WTO for decarbonizing the travel industry. And so it will be live in the next weeks. And today we make corporate events carbon neutral with different corporations. We compensate flights with Iberia. We do it real-time rights. We compensate and calculate and compensate real-time rights with Cabify, which is a big innovation on the space to know, and also electronics, as I mentioned. And finally, our partner Santander Bank, which is one of the leading banks in the world. And we compensated last year the carbon footprint. We are working on this year also in different innovation and pilots with them. And we won the X Prize of Santander. So in my opinion, and also we do it with buildings. We can calculate and compensate buildings with the software of the ITEC of Catalonia in Spain. And we are capable to expand the software calculation compensation to any other countries. And thank you. Like in my opinion, the most relevant of all of these, as Margaret said, is collaboration. We need to, it doesn't make a point to replicate something that is already in the market, as you said. And I think that is very, very important that we can collaborate and integrate the solutions, because we don't have too much time. And yeah, at the moment we work for that, and we work for our future generations. Thank you so much.
Well, thank you, Francisco Benedito, CEO of Climate Trade. Very impressive. Congratulations. Also very inspiring. Great to see.
Thank you, Javier.
Great to see that Climate Trade is it's at the forefront in APIs, and good to hear that there's already some national registries and also the stock exchange in Spain. Before I go later on into a Q&A, Frank, maybe a quick question so that the audience has a big picture, the big picture ready. So what do you think would be the size of the voluntary market, give or take?
Worldwide.
Mm-hmm. If you had to give a figure, or what do you expect that the projection could be for 2021?
Well, we were talking about like in data from 2018, 2019, we were talking about 6 billion on the voluntary markets, towards 2030, sorry. But I think that this is going to go over expectations, no? and especially there are popping up national schemes on different European countries and other different countries, and especially Latin America, that was a provider of carbon offsets for the world. Now it's starting also to reactivate different countries, so there is demand, there is already appetite for this. I wouldn't be able to say an exact amount, but I think that towards 2030 we are talking about more than 20-30 billion on the voluntary market, and maybe Margaret for sure will be able to clarify better this number.
All right, that's good. Then maybe that will serve us later on as a Q&A among panelists. I think it's important that we have an idea on what the dimension is of the carbon credit voluntary market. So thank you so much, Frank. With that, we move with Fredric Degret.
Thank you, Javier.
Thank you. Who is the Chief Executive Officer of NOAA Regen, Blue Economy. And very good to see you, Fred. The floor is yours. Go ahead, please.
Thank you, Javier. Thank you, everybody. Just apologize because I'm in an airport in Paris, so it could be a bit noisy. Just before starting my presentation, I'm going to go back to some comments that I've made Francisco just before, which is everything deals with collaboration. So we are here in a panel where NOAA is already partnering with Gold Standard through SystemCert. And we're also talking with Francisco to set up a collaborative model, not to reinvent what is already existing. So I'm going to share my screen. Everybody can see it, or?
Yes, yes, we can. Go ahead, please, Fred.
Okay, this is better. So we are NOAA, and NOAA is the acronym of Network of Ocean Ambassador Headquarters and Regen for Regeneration. And what we offer is to build up, set up the adequate ecosystem necessary for the Blue Revolution. We believe that the ocean regeneration is the priority, and the way to do it is to empower a blue tech solution and ocean-based solution through a sustainable way, and to connect funds to the industry into eco regions. So I'm going to go very quickly on key figures that everybody knows. So the sea level rise is on the way. It's already cities representing 1.5 billion of citizens, and the climate change is empowering displacement of population through the shoreline. So it's going to be even more dramatic, and we see that those coastal cities are in a need to anticipate this combined effect for facing the coming challenge that they're going to have. So blue economy is certainly the way to adapt, regenerate, and protect the political stability. So here it's a figure that shows that where the people are living, the shoreline are the worst and the most damaging in the world. And also it is the same place where sea level rise is gonna affect the population. So there's a need of anticipation. It's very strange to believe that we are thinking of having discovered less than 10% of the biodiversity. There's very few investment channels to the blue economy because it's not very well known for investment. The bankability pipeline are not yet very concrete. Even if the sector is the second largest global economic sector, we think the revolution is going to start. We are expecting it to double between now and 2030, so less than a decade. Okay, we are NOAA as going to set up the ecosystem, the necessary ecosystem to make it make it happen. So if the sector is going to double, we believe that 4 subsectors are going to meet an exponential growth, and we are setting up the ESG platform for empowering those 4 subsector in priority. So how do we do it? NOAA is registering legal SPVs or legal structure to make an yeah.
I'm sorry to interrupt you. I don't know if you are running us through the slides or if
yeah.
you are, because so far we're stuck on the initial.
Yeah. Okay, so I'm yes running to the okay. So maybe it's not the right screen. So okay, sorry. So yes, this is now going.
Yes, yes, please go ahead.
Okay, so very sorry for this. So yeah, some figures that I've commented just before. Sea level rise, which it's a poor reality which is coming. So this is the subsectors that we believe are going to meet an exponential growth. So energy, digital infrastructure, and food. And as I said, NOAA is setting up the ESG platforms for the transition into the blue economy. Okay, so what basically we're doing, NOAA is registering dedicated SPVs, legal structures, to coordinate the blue value chain in a holistic way through 5 platforms. Okay, so we are talking about a financial ecosystem platform, an industrial platform, an accelerator platform, a digital platform, and a certification platform. So what we do, we set up the legal structuring, and we set up the central governance and advisory, and then we invite symbiotic and strategic partner to coordinate and co-manage this ecosystem, connecting the funds with the value chain and to the concrete industry for the kickstart of the blue revolution. Okay, migrating from the old exploitative and extracting paradigm to the new preservation and regeneration paradigm. So concretely what it is, so the financial ecosystem is combine innovative or traditional existing manner to channel the funds to the blue economy. So one of them is the Blue Climate Fund, which is a RAIF fund registered in Luxembourg, working like an umbrella fund. And each of the sub-funds that we're going to set up are empowering a blue tech that is disruptive and that can bring part of the integral solution for the coastal cities. Okay, but we are also talking with partners to set up an ESG blue stock exchange, blue fintech, so potentially here a subject to collaborate with climate trade, a blue foundation of scientific cooperation for tax incentive and donations, and at the end of the story, a blue international federation. This is the financial platform, and we connect it to the concrete industries into eco-regions, and we decentralize the impact in the investment into eco-region that we called blue nations, smart blue nations. Basically, what is a blue nation? It's a free zone, an ESG free zones for the planet. So it's a tax incentive ecosystem for making it more efficient for industries to be developing their solution into such a place, that only dedicated for companies with impact certification, and they have to reinvest part of their revenues into the Blue Climate Fund to make it an even more powerful financial tool. So we connect in this way the financial platform to a decentralizing mechanism, eco-region industries. Okay, so the goal is to set up this kind of blue nation in strategic points worldwide to make a global impact. And we are starting it with the Panama, which we're going to sign the first free zones for the planet in Panama next week. What is the industry? We called it Smart ES Gigafactory, which are it's kind of co-propriety of industrial business unit, which with mutualized services and mutualized infrastructure. And all of the business unit that we installed in this kind of ESG Gigafactory are bringing a solution to the coastal cities for waste management, for net zero carbon transport, for sanitation, clear water, for food production, organic food, etc. So this is the kind of business unit that we are electing, and we invite leaders of the industry to set up their own part of industry inside this ESG Gigafactory. And as I said, there's no tax, but they have the obligation to reinvest part of their investment into the blue value chain. Okay. And we empower local. So these are examples of industries that we are electing. So this is a WIG aircraft, which is basically a boat. It's classified as a boat, and it can transport people without using land-based infrastructure. It's quick, and it's running fully hydrogen. So it's zero carbon. This is a prefab floating habitat, which are not stressing the land. Everything is prefab and with carbon neutral construction, totally off the grid. This is a new kind of shipyard that we're going to install, which are fully automated, able to produce multiple assets. These are solutions that we're going to install into ports, so production of energy, making added values for port installations. This is a floating structure that we put into coastal cities as a regional headquarter, helps to connect the value chain, to incubate startup in the local ecosystem. So this is the way we connect the funds to the concrete industry, bringing the solutions for the cities and making them able to adapt and anticipate. And if we do it at a global scale, targeting the largest coastal cities, then we believe we can make a global impact on the ocean regeneration. Alongside this initiative, we have other platform on the way, which is an accelerator platform. We have partners able to empower this kind of project sourcing. One of them is ASBAN, which is a consortium that NOAA has co-created, and with it we have we won a public tender for coordinating the blue growth strategy for the Commission, the European Commission, the digital platform, which is the way to connect the blue value chain in a digital way, and for sure the impact certification platform. Every investment going to channel through the Blue Climate Fund will have a compliance obligation of an impact accreditation before being able to receive any funds. So this is, in some words, the project of NOAA. Thanks for listening.
Well, thank you so much, Fred. Wow. Ambitious and refreshing, and particularly for people like myself who've been talking and listening about the Green Climate Fund for the last 7 years, day after day. Now to hear a Blue Climate Fund is it sounds like frankly very refreshing. Best of luck to you. Maybe a quick question before we go into the Q&A. I've heard about the European Commission, and I have also seen throughout the presentation that's supported by the European Maritime and Fisheries Fund. Can you just give us a couple of words of what the type of support is?
Yeah, totally. So we have been introducing such a holistic project to coordinate the Blue Growth Strategy to the European Commission. The department is called DG Mare, and they love the idea, the way to set up such an ecosystem. So they decided to support the initiative, and for this they had to organize a public tender, because this is the way they work. So and inviting us to answer to the poll. So we have been answering through the setup of a consortium to showcase our capability to green strategic partner of the maritime value chain. So the consortium is called ASBAN, which is Atlantic Strategic Port Blue Accelerator Network, which has been co-funded by 13 strategic partners, represent 130 up to 130 strategic partners, and representing more than 40,000 companies of the maritime around the world. And we have answered to the call through ASBAN, and the project is funded by a European Maritime Infrastructure Fund.
Okay. All right. Thank you. We will go back into a Q&A, but thank you for that clarification, Fred. And last but not least, and going back into the blue and from blue to green, I would like to introduce Dr. Leo Park, manager of financial institutions at the Green Climate Fund. The floor is yours, Leo, with the view of having a presentation that will be followed later on by Q&A among all of us. The floor is yours.
Thank you, Dr. Manzanares. Actually, I have not prepared slides, and I did communicate this message to the organizer. So I will, do this verbally. So thank you very much again for your kind introduction, and also invitation. Great to be reconnected to everyone, including with some of the acquaintances from Gold Standard Foundation. So I'll keep my intervention quite short so that we can, leave more time for Q&A. Since we have a representative from GCF. So today I'll be focusing more on how we can do more harmonized disclosure on the climate related financial risks, as well as how we can collaborate more with international platforms to make sure that we can be as inclusive as possible. And of course, this is one of the strategic items that GCF has been working on for some time, either through, for example, a readiness program that can help our developing countries to build their capacity and to replicate the best practices developed mostly in developed countries. So as you know, there is an ongoing effort to harmonize climate-related information disclosure standards. One of the good news recently was that there was a merger between the Sustainability Accounting Standard Board and as well as International Integrated Reporting Council, and they now created a new organization called the Value Reporting Foundation, and they intend to unite their ESG reporting frameworks. So as you know, there has been quite criticism of these global reporting standards, I think simply because there were too many of them, and consequently many corporate and the market actors they got a little confused because it was difficult for them to follow all these different matrix and methodologies. Because I just mentioned two of them, but there are actually more. I'm sure everyone is quite familiar with, for example, standards like CDP, CDSB, GRI, IIRC that I mentioned, and SASB, which again they have merged recently, and they all apply different methodologies and metrics. And then of course there are other ESG scoring system done by entities like Thomson Reuters, MSCI, or other very well-known names. And then there was a very interesting literature which found a low correlation among them, meaning that it would be very difficult for corporates to basically comply themselves with the different standards and the ESG scores. So for example, one big corporate may get a high score using one of the ESG standards, but they may still score low with others because simply they have a different the reporting systems. So I would say the harmonization efforts definitely a good sign, but maybe not enough. I think the game changer can be the International Financial Reporting Standards, IFRS in short, because as you know, they are very well positioned to establish authority around sustainability disclosure standards for financial sector, simply because of their outreach and network, given that around 120 countries require IFRS for domestic listed companies, I think their influence on the disclosure standards will be unparalleled. But there is still an issue because, for example, the United States, who does not use the IFRS-based accounting system, while they are one of the biggest markets in the world, but they have their own accounting system, which is called GAAP, GAAP, and I don't see the convergence between the two standards anytime soon. So we'll have to see what kind of pathway the US will be pursuing. Because again, any kind of decision made by US tends to become a very influential factor in the global market. So it'll be very interesting to see how these things will unfold. I saw the news earlier today. The US SEC they are still debating, also in the process of a consultation with the market actors, whether, for example, they should integrate these sustainability reporting standards into their financial reporting. For example, most of the big corporates like Apple or Microsoft, they are against integrating the sustainability related components into their financial accounting system or reporting system, simply because they don't want to be liable. Mainly because all these sustainability components are forward-looking, so it's actually quite difficult for them to come up with a clear pathway, and if they do become liable for the information they disclose, which they cannot control, I think I can to some extent sympathize with their concerns. On the other hand, if you look at the financial sector, like asset managers, the institutional investors, they are actually supporting this integrated approach where financial reporting system includes non-financial information, especially the sustainability ones. So there is quite a gap, I guess, between these two different groups within the market. So we'll have to see how, for example, US SEC will decide by combining the different concerns raised by by various parties. From the GCF perspective, like I said, all the reporting standards that we are aware of have been developed and used by mostly developed country actors. And the adoption rate in developing countries is quite low. So if you look at like TCFD, the list of supporters, the proportion of developing country supporters, I think, is less than 5%. So there is, I'm sure, room for improvement. And we want to make sure that we help developing country stakeholders so that first they can be aware of this global trend, and also to support them to replicate the best practices that are likely to have been tested in developed countries. So I think this is a role the GCF can play by, for example, deploying our readiness program so that we can build capacity of the relevant actors in developing countries. And as you know, GCF's role is always to play this like a bridging role to basically make sure that developing countries are always on board and that they are well aware of what's happening in developed countries as well. So the second thing also I want to highlight is the global platform. So as some of you may know, the G20, the group of 20, just launched its Sustainable Finance Working Group, which used to be a Sustainable Finance Study Group before the Biden administration took the office in the US. And now they converted the study group into the working group, and the co-chairs are the US and China, and the secretariat this year is a UNDP under the Italian presidency. So it's quite interesting exercise, and they are in the process of developing the sustainable finance roadmap in consultation with the international organizations and knowledge partners. That's the terminology they use, including entities like GCF as well. So I do believe that these kind of international platforms, including again G20, and then there is a network for greening the financial system for central banks and regulators, they all provide very exciting opportunities to all parties involved, collaborate and exchange their knowledge. And this is, of course, not just to involve the financial actors, but those who will be impacted, by the decisions made by the financial actors, meaning the corporates, and also, big corporates as well as SMEs. SMEs, again, as you know, they, account most of the, GDP in developing countries. So they have a very, very important role to play, mostly for developing countries. So we hope to, again, to be engaging with them as well. And then, of course, there's G7 group, who also endorsed, making TCFD-based climate risk disclosure mandatory. So I'm of the view that this will provide a very strong impetus to wider group engagement and adoption. And if you look at G20 and GFS, of course, there are a few developing countries who are already involved, and these are large, more advanced, large emitting and more advanced developing countries such as Brazil, India, Indonesia, Mexico, and South Africa. But I think we can do more by engaging with the non-G20 members as well. So, like I said earlier, we definitely have to start by raising awareness and building capacity of the relevant stakeholders, such as central banks, regulators, banks, and insurance companies, as well as other private sector actors. And I'd like to emphasize again that GCF will be more than happy to offer our readiness funding, provided that there is a support from our national designated authority, and as well as our delivery partners, such as GGGI, as well as other partners that we work with, and of course we'll be again more than happy to use this kind of opportunity to again share our insight, and also invite others to provide their knowledge and the ideas to us so that we can implement the ideas all together. Thank you. Over to you, Javier.
All right, thank you so much, Leo, and very, very interesting topic, as a matter of fact. And I say, make no mistake, there is no green sustainable finance transformation if there is no transformation of the way we account for climate risk, of the way we account for ESG in general. And that's happening slowly. We've heard that the SEC is going through a consultation process. We hear the IFRS has made some progress, hopefully CAP as well very soon. But the other frameworks are the ones that are doing the work and take the heavy load. There's plenty of initiatives for consultation. Particularly, I'm referring to the Scope 1, to the Scope 1, Scope 2, Scope 3. My question to you, very quick one right now, Leo, is it seems to me that developing countries are somehow being left out, or they are not, better said, that they are not participating, or they are not engaging into this consultation, very important process. What are your views on that?
Yeah, I fully agree. I think except a few big developing countries, like I mentioned, I think simply there is a lack of awareness on developing countries side. And I see that this is a role that entities like GCF as well as other international organizations need to play, because our mandate is to support developing countries. So we definitely need to start by raising awareness and build capacities. I mean, if you look at, for example, Indonesia, they admitted that the capacity of their regulators is kind of below the capacity at the private sector that they have already. So there is a kind of mismatch, even in terms of the building capacity of the relevant actors. So I definitely encourage all the entities, including GCF ourselves, to fill that gap, and we can do this through different measures. And from the GCF perspective, the readiness funding, I think, is most relevant to make those type of policy level interventions.
Right. Thank you again for that, Leo. Colleagues, we have gone through this initial part of introduction presentations and also addressing a few questions. I'll be very happy to hear from panelists if they have any specific questions, even among themselves, so to make this a little bit more exciting. But if in any case, and in the meantime, I would like to go to a number of questions that I think they come to us after the introductions. Maybe I'll start with Fernando. Fernando, what's the right level of ambition, in your opinion, when we talk about the international financial organizations and multilaterals and the role they play in the digital transformation? Over to you.
Thank you, Javier. I hope you can hear me loud and clear. The level of ambition is a very important topic, given that we are not digital companies. We are not Apple, we are not Google, and we don't want to be. I think it's extremely important to set the level of ambition as enablers and organizations that can finance, that can support, that can set standards, as we have seen with Margaret and another of the panelists. And at the same time, we can make a difference by leading by example. Let me share with you one piece of information which I think is quite important. EBRD was one of the investors, early investors in UiPath, which, as you know, is one of the leading robotics process automation and technology firms worldwide, and which has recently been floated in the US stock exchange. And of course, this being a Romanian startup, early days, was seeking investment, and EBRD was one of the original startup financiers. Now, there are other opportunities like this. There will be other startups which become extremely successful, and the role of financial institutions is to identify and invest in these startups. At the same time, I think we have to recognize that we will be more successful by adopting and fostering technologies which are out there versus trying to become the leaders in terms of technology development. And that's also a sensible recognition that we can all do. Having said that, the second part of the answer is we have to lead by example. We have to recognize that many times our processes are quite bureaucratic and not digitalized, and that our user experiences have a lot of room for improvement. This is why, while we work with civil society and businesses and private sector, we also have to look internally at ourselves and make sure that we continue to invest and develop ourselves as true digital international financial institutions. I hope I have answered your question.
Yes, indeed. Thank you so much, Fernando. And I would like to stay for a few more minutes in the digital, in the innovation and technology arena. And the next question goes to Francisco. When we talk about the companies offsetting their carbon footprints, why do you think that blockchain is necessary for this? What are the benefits? Why is it that we cannot do it with other platforms in the same seamless manner? Over to you,
Javier. Well, basically, as I was mentioning before in the presentation, it is very relevant today to generate impact. No, I mean, there are two ways. There are two reasons why it is important. Obviously, we need to encourage developers to develop more projects, that really generate that impact, and they need to receive the fair price first for their effort, and also we, the customers or the investors, and as long as they need to pool that money to channel that money to that project, and they need to, at some point, after reducing, compensating, they need to see that the money is going to the right place. Blockchain is guaranteeing this, is guaranteeing that traceability, is guaranteeing that transparency, that whenever we make a transaction, climate trade or any other blockchain platform, whatever what we do is we can prove that that money went to the developer in the exact amount, and which one is the fee that I charge for the transaction. No, until today you were a sustainability manager, you get the phone, you were to buy from a broker the credits, you get the price, but you don't know if that price you are paying, how much is going to the pocket of the broker, how much is going to the developer. That's super relevant. And today, and that's between other things what killed the carbon markets in the past. So I think that we have a new technology that can provide the transparency, and that is very relevant to solve this issue.
All right, thank you so much, Fran. Very clarifying. Would like to jump now with Maggie. Maggie, how do you reconcile ESG metrics that dominate the sustainable finance world to real verified impact metrics that can help us more accurately measure progress towards Paris and the Agenda 2030? Over to you, Maggie.
Thank you, Javier. There are two common ways to assess the impact of a given product or an organization. One is the inventory reporting, measuring and reporting the impacts of an organization's operations, such as carbon emissions, biodiversity impact, or social equality. And second is the impact quantification, so measuring the impact of a particular effort or investment intervention to compare what would have happened in its absence. So and Leo made a very great presentation there. The financial community and companies under EU disclosure are accustomed to annual inventory reporting on ESG performance indicators. And this helps to paint an overall picture of alignment with climate and SDG targets at the macro level. But it doesn't necessarily identify or reward the financial organizations, companies, or cities that contribute to achieving the SDGs and climate goals, nor is it effective at limiting greenwashing. But if these quantifying impacts against a baseline gives a clear measurement of contribution of a wide range of climate effort, for example, individual projects, funds, or portfolio, or even cities' urban plans, I think it's better to do that quantifying impact against the baseline. So we need, in order to do that, we need credible inventory, transparent and credible data to support that, and standards and digital solutions. So as Leo mentioned and elaborate on various reporting standards, it is a frustration, it is a challenge. And that's why what Fredric's doing and Francisco's doing on digital solutions can support overcome those current challenges around slow harmonization. And as Francisco just mentioned, it enhances traceability and transparency, and therefore reduces the sort of confusion around having to deal with many different standards. But if the credible data is in the system, then taking the holistic approach can actually extract data and then create a report. So there needs to be a great sort of collaboration between the financial industry, the companies, as well as digital solutions to ensure that we can sort of reconcile the ESG metric and quantify those against baseline and give a clear measurement of the contributions.
Yeah, thank you, Maggie. Maggie, and being our main topic, green sustainable finance transformation, so important enough is the private sector, right? And the private sector capital. So would you like to share with us additional examples on how standards can be used to unlock private sector capital for truly green finance? Over to you.
There are many initiatives happening around the world, and I've been very encouraged in the last few years, especially the leadership of Green Climate Fund in enabling private sector engagement. There are different ways that standards like us can engage. One is through the carbon markets that Francisco and Fredric also touched on, and evolving into a broader results-based finance that doesn't necessarily rely on carbon trading. So there are different ways this market mechanism can evolve in future. And also another one is for corporates, how do we account for low carbon commodities? So we set out a test to work with partners like the ICL standards like FSC, Fair Trade, and Better Cotton Initiative to see how we could provide guidance on quantifying carbon footprint or carbon reduction and removal within their sustainable production process, resulting in commodities that have verified lower emission factors. And Javier, you mentioned scope 1, 2, and 3. Clearly, scope 3 is the most challenging element for the corporate. So how we can actually account for that, link the project level intervention and investment back into the corporate accounting that Leo was telling us about. An important aspect to remember is the importance of blended finance. And I know we talk about this in almost all global forums, but I think Green Climate Fund is really making a leadership in creating that innovative initiatives and programs to make sure that this blended finance is it's a relatively new approach, although we talked about it a lot, but it's important to ensure that using public money to down the risk associated with investment, especially for low-income countries, developing countries. So we need to make sure we can drive innovation through blended finance mechanisms and scale that up and replicate that going forward.
Many thanks, Maggie. You mentioned earlier on about the work of the voluntary market on the offset of carbon credits, and we are definitely a host country, Korea. I do realize that my colleague Leo is very well versed into the ETS. My question is more for Frank. So why would you say that climate trade has got the adequate tool for the Korean companies to offset their carbon footprint? Apart from the fact that we do see in Korea an ETS. Over to you, Frank.
Thank you, Javier. Well, basically, it is a multi-language platform that can, in a very easy way, help the Korean companies to access all projects all around the world, and especially in Asia. So that obviously, like, there is more interest in that part. So basically, what you can do, and from the perspective of the sustainability manager of one Korean company that has to achieve some targets that they have set up for their carbon neutrality, they can find in a very easy way all the projects. They can select that project. They can have that certificate on blockchain, the original certificate afterwards, and they can provide that requirements that they need for the non-financial reporting at the very end and for the regulations in the country, And it is very important to be able to acknowledge that in case that the Korean companies need other product that we don't have let's say, I don't know how many projects might be worldwide, but if gold standard say more or less 20,000, imagine that might be 100,000 worldwide, I don't know. So we don't have 100,000 projects in the platform, but it is very easy for our customers that they like a project like the other day I was talking to a US of one of the bigger US corporations. They say, I really like your tool, how we can have a dashboard where you can have all the certificates, all the invoices, everything in one place. So imagine in 5 years, if you're a big corporation and you have to remember what you did in 2021, buying from 5 brokers, and where are the AirPods, where are the NDAs and everything, you have it there in one place, everything. So that's a tool to organize your carbon necessities in terms of the carbon offsetting. Thank you, Javier.
All right, thank you so much, Frank. I'm moving quickly enough with Fred. Fred, I hope that you're not missing your flight. I think you are still at the airport. I'd like to give you another question at the end. Why is it necessary to kickstart the blue regeneration through the setup of such a holistic blue ecosystem offered by NOAA? Over to you. I think you're on mute, Fred, and I think if you can take no more than 2 or 3 minutes, thank you. Over to you.
Okay, it is working now. Yeah, I have to switch to the phone. Yes, so the kickstart of the blue revolution is a necessity. okay, because oceans are, I think, the key player to tackle the climate change. Okay, they are absorbing heat, they are absorbing carbon, they are emitting oxygen, they are bringing food to most of the population worldwide. And today we have already too much damage the ocean ecosystem. It's not now an option to just stop damaging it. And as we saw recently in my presentation, that people are going to move to the coast even more. So even stressing more the shoreline and damaging it. So the only solution is to regenerate. And this in my opinion, the only challenge that humanity can face. And the way to do it is to bring revenues to the impact, because otherwise we're going to have no possibility to attract enough private capital into the ocean regeneration. So we need to empower a strong economic model based on ocean resources and to use it in a sustainable way. So for this to happen, and for the kickstart of such a revolution, a necessary revolution, we need to put in place an holistic ecosystem dedicated to educate finance, to use blended finance to bring bankability to projects, to connect those funds to the concrete industry and big techs, and to decentralize the impact and the investment into eco-region. And this can be achieved, I think, with only an adequate ecosystem.
Thank you very much for sharing, Fred.
Thank you.
We are concluding the session for today. I give the floor back to Professor Wang, Director of the Seoul National University Global R&D Center. We've had a fantastic session panel. I would like to thank very much all the panel members, Maggie, Fernando, Frank, Leo, Fred. A big appreciation. Hopefully we will see each other somewhere in the world and maybe towards COP26. So thank you so much, Professor Jun-Sok Wang. Back to you.